Did you ever did you ever think about when you were young and you didn't even know about this thing? It's called credit score. Did you ever face any problem with your credit score? Did you even ask yourself what is the credit score for? I think it's a sort of social conditioning. Well, it's a score indeed, but there are some things that we need to discuss. Well, let me tell you my shock with the credit score. So I arrived here in the United States in 2010. I didn't know anything about a credit score. Got married and everything, and we so it came much later on. They could not accept us to be put on a mortgage together with my ex-wife because I did not have a credit history. Therefore, it was a risk for them. And another time when I purchased my first car with a car loan, I did not have an extensive credit history. I did not have a credit score. I did not have credit cards because my mentality was, well, you pay cash whenever you can. And that was something that I really appreciated since then. I always done the same since I moved from Italy. And in the past when I was living in Italy. So they give me the loan, but they slap a 14%, 14.7% interest rate. Now, dumb as I was, I actually went along with it, and I regret that to buy that car since then. It was crazy. I could have bought something cheaper, but I did not have enough financial literacy at the time. I had more idiocy than financial literacy. That rhymes. And I refinanced a few years later. The loan was for 5 years, and I did everything to pay it in 3, and I succeeded, and I paid it off. And after that, I said, nevermore. I'm not going to do that anymore. So what is America's fixation with credit history, guys? So the little 3-digit number is a big deal in our financial lives. It serves as a sort of grade for how you handle money. An A gets you an approval for an apartment at a decent rate, or your car loan, and an F gets you a rental application turned down and makes your car insurance more expensive. Your credit score is important, apparently. Yes. And to my surprise, look what I found. Employers who use credit history do so because they assume financially. Yes, employers, you might have not realized it, but your credit report could even make a difference in whether you land a new job or not. Do you think, is this legal? I checked. Yes, it is legal. Because employers want financially responsible employees. If you cannot deal with your money, with your finances, how can you deal with the job? So if you never seem to pay bills on time, employers may be skeptical that you can meet deadlines or regularly get to work on time. So the anxiety about credit scores is palpable, and it's also lucrative. So as always, I think like, wow, this is insane. It's lucrative. No way. Credit bureaus, startups, and even one-man operations can make a lot of money by playing into the people's fears about their credit. They offer services that monitor credit scores and alert you when yours changed. Or they say they can help you repair your damaged credit, for a price, of course. Many of these costly solutions do not work as well as promise or deliver much, if any, of bang for your buck. The credit scoring companies have figured out how to profit from the anxiety for consumers with Credit Watch and credit monitoring and all of these add-on programs. So when companies find a way to profit on anxiety, they have an incentive to create anxiety. Isn't that crazy? So an anxiety creating machine. And how? Because you worry and you say, well, let me buy that credit monitoring app or system or whatever, and in the meantime you're just gonna pay everything every month. So what these companies won't tell you is that the best things to help you ease your credit related worries are cheap and even free. So you can check your credit regularly at no cost from a lot of sources. Your credit card company likely tells you your score, and you can access your report weekly free of charge too. Freezing your credit also doesn't run you anything. It's important to be aware of your credit score, but you don't need to obsess over it or let marketers convince you to pay a bunch of stuff that you don't really need because you're panicked. So you got the big three, Experian. What was the other one? Oh shoot, I forgot. Experian. I signed up once for Credit Karma, and basically it's the website that gives you Equifax, I think, Experian, Equifax, and TransUnion, I suppose. I think so, yeah. And all these three, they calculate your credit score and they tell you different scores. They're different from each other. Don't know why. So I just want to have a chance to see my credit score and see how my credit history went. And I can see that historically where your credit was open, if you got credit cards and everything. But what you see there, you see, oh, you're qualified for these credit cards. Oh, you're qualified for this loan. Now, somebody that is really like really how can I say, naive. I don't know if it's naivete to some point, but it can be like somebody say, oh my God, look, oh, they offer me this much. Oh, look, a credit card. Oh, look this. They look at the things that the stuff that they can buy, and they get lured in, and Credit Karma has like deals with these credit card companies that they say, hey, if you get somebody to get this credit card, they give you a cut, so they survive on this system. Hey, if you can get that person that loan, hey, you can get a cut, so that's crazy. And so they can offer you services and, hey, we check your credit, we do this, we do that for you. And there's this gentleman here, the senior attorney for the National Consumer Law Center. He said there's no reason even to pay for credit monitoring. There's no reason to pay for a credit score or pay for service for a credit score. So that's crazy. Experian is especially a bad offender. Why? Well, not just for its suite of likely unnecessary products, but because as part of its standard agreement, the company makes customers agree to mandatory arbitration, meaning you don't get to sue if Experian has a big screw up later. And the company, they say, is committed to financial inclusion. Look at these big words these guys use. Anything to make money. You don't need to fall for it. That's crazy. And millions of members find value in having Experian as their financial co-pilot, helping them improve, manage, and protect their financial profile, the spokesperson said. They did not address the arbitration agreement. Guess what? The credit monitoring and identity theft protection industry is worth about $5.4 billion in annual revenue. The growth of the industry makes sense in this day and age. Data breaches are constant. So you see, I don't know, every 5 seconds there is a data breach. I don't know, they got all my data already. And fraudulent ding on your credit report or someone opening an account in your name can be an enormous headache. A 2022 brief from the NCLC described credit monitoring bundles as often expensive and ineffective, and argued that they failed to meaningfully benefit consumers. It noted that most identity theft takes place in existing accounts, meaning monitoring services that alert consumers to newly opened accounts miss it. They also often fail to catch fraud related to medical services or tax refunds. And even when they do catch identity theft, they do so after the fact. So it's a waste of money, guys. I really don't get to. The other thing, credit repair companies that target people with lower incomes as people are desperate to improve their credit reports and scores. So these people feed on people's vulnerabilities and inexperience into tricking them to buy services that they really do not need. Because, they say, yeah, I'm just going to have peace of mind. Oh, they're going to help me out. No, they're not going to help you out. You're the product. These people are feeding off you. Gen Zers and millennials who tend to have lower credit score, of course they do. Their credit score, their credit history is shorter because they're younger. So than older generations that may not have extensive credit files. and may be more likely to find themselves looking at credit repair services to get negative items off the reports, or have some sort of credit building service. So just help them develop a record. Help them develop a record. There's nothing that you can do by yourself. Just buy a credit card with a lower limit and use it as a debit card and pay it off every time you use it. And that's how you build your credit. So that's silly. The company also don't do anything people cannot do on their own. There you go. So federal regulators, last thing, have gone after several companies accused of playing it fast and loose with the way they approach consumers. In 2017, the Consumer Financial Protection Bureau settled with TransUnion over charges related to how it was marketing its products, including credit monitoring, and ordered it to stop deceptive practices. Ooh. In 2022, it sued TransUnion accusing of violating the order. In 2005, it dinged Experian for marketing free credit reports that weren't so free. Last year, the CFPB, I don't know what that acronym means, entered into a $2.7 billion settlement with a ring of credit repair brands accused of illegally collecting fees for their services. Over a decade ago, the Federal Trade Commission in 35 states reached a $12 million settlement with LifeLock after alleging that it had made false claims about its identity theft protection services. So these guys do not care. They just want you to keep on paying for these stupid services. And then companies like Credit Karma that let you access a lot of your information easily and for free make it so your credit score isn't such a mystery. The downside is that they make their money by giving your information to a bunch of third-party products and taking a cut. As always, like with anything else that is free, guys, if it's free, you are the product. Therefore, just be wary of it. There's a sense of existential dread around credit scores. A negative one can really drag people down. Yes, so let's talk about this. I had to rent an apartment, a studio apartment, 2016, I think, or 17, around that time. And the lady from the apartment complex, in order for me to rent the apartment, she said, "Do you have a credit score?" I said, "Yeah, I do, but I don't have an extensive credit history." So she didn't trust me. It's not like she didn't trust me, but you have to understand, many people don't pay rent and all that stuff. So she said, you need to pay me the first month, the last month, and the deposit, security deposit. So I have to disburse, now back then, it was $585. Oh, just think about how cheap was rent for a studio apartment. It was really tiny though, $585 a month. So I have to take like $1,700 all at once. And my bank account was with $200, left with $200, and I was working. But hard time, tough times, been there, done that. But just to tell you, like, it looks like to a certain extent, society, it just like pushes you. You get a better interest rate if you have a good credit score, and you just need to. It's like we play this game. So how important is this? So credit score ranges vary by creditor and scope type, but there are some common ranges for FICO scores. Ooh, FICO scores. So we got poor score, so 300, 579, fair from 580 to 669, good for 670 to 739, very good 740, 799, excellent 800 and 850. Wow. And then a score about 760 is considered very good or exceptional and can lead to lower interest rates and better loan approval odds. So I understand we want people to have good credit score and to be trustworthy. It's a measure for that you say it's your history of saying that you're very good at paying good stuff, for stuff, that for services, for stuff, whatever. But is it really necessary? Because if you don't have it, it's like you're cut out of society at the same time. Like for me, my case, I paid everything cash. I did not have any student loans. I paid everything off. I paid my car off. I paid everything. And still, I wasn't able, I talked to the agent because he wanted to talk to me before giving me the loan and said like, you do have a credit score, you do have this, you have this. No, I paid everything, and I just don't have an extensive history, and I pay everything cash, and they just slap me with a higher interest rate anyways. So how can your credit score drop? So late or missed payments, of course, if you carry a balance every month. How much credit utilization you have, that varies across all the cards you have. There's a percentage or ratio. And then the thing that really, it's a bummer, is that when you finish to pay off something, your credit score drops. And that's really what really like messed me up mentally and psychologically. Say my score should go up because I finished to pay this thing. And that's kind of really put me down and made me understand, it's like, oh man, there's something a little bit scammy about this. So closing older accounts can shorten a credit history, applying for new credit. So if they do hard inquiries, that's when you go and ask, you have to buy something, the bank or somebody's going to do a hard inquiry, and that's going to drop your score. So that's crazy. To bankruptcy or foreclosure, well, that's the things that it's. But so somebody puts a question here: why did my credit score drop 40 points after paying off debt? Changes to your credit mix and the age of accounts you leave open. You see, that's insane. So it means you need to be constantly in debt. So let's talk about that. Just hit the microphone. Let's talk about that quickly. So what happens if you are in extreme debt? I mean, for silly stuff, for credit card charges and everything. For many people, it's just out of necessity because they don't have enough money to survive. Therefore, they get in debt because of that. But in many other cases, some people have low impulse control. They might overgo and overspend on stupid shit. Just go to the store and buy stuff all the time, useless stuff. Well, you gotta have to pay that money back. And I always have a motto, and it's like, if you cannot pay with cash, I cannot afford it. Therefore, I cannot buy it. And since then, personally, I've been using the credit cards. I never had credit cards before, but I've just been using them as a debit card, because there is more protection, and if you're responsible, you can get some percentage of money back, some points or whatever, some little perks. But some people just do it for the perks. And I mean, like, make credit cards and money work for you. Don't get bedazzled by the shiny stuff. Hey, we offer you this. So if you open this credit card with us today at Kohl's, you're gonna save like $30-$40 on your purchase today. You want to do it? Yeah, sign me up. And no, that's like, the more stuff you open, it's gonna drag you down, and you want to be financially responsible to start building up. I did a review once on talk about Dave Ramsey in an old video of mine. He wrote this book, The Total Money Makeover, and it had really some good tips about how to get out of debt and all of that. If you're really looking for help, maybe for any suggestion, you might go and read it. It's Dave Ramsey. He also has a daily podcast, I think, and some people may think that it's too much. He's focused too much on avoiding credit cards, avoiding debt at all costs. There are some debts that you really cannot. They're born out of necessity because you might not have the money all at once. But if you have a stable job, you can dilute the cost and pay off with time, always responsibly. And so to each his own. Be responsible with your finances. And that concludes this segment here, ladies and gentlemen. And if you pass the word around, subscribe, share, comment below, and I will see you next time. Bye.